Welcome back to BLOCKTV. It's time now for Chain Breakers. With Bitcoin stuck in a channel in the wake of some dramatic market moves, I'm joined now by Bruce Fenton, CEO and founder of Atlantic Financial, Chainstone Labs, and the Satoshi Roundtable Retreats to discuss some of the latest news in and around the crypto markets. Firstly, Bruce, thanks so much for joining us.
Thanks for having me.
All right, so to kick us off, I know you want to talk about the recent academic article that was sort of resurged, as it were, back thanks to the Bloomberg piece, talking about the connection between Tether and a single whale that supposedly was the cause behind the 2017 all-time high bull market. Now, Bruce, I've had a quick look through your Twitter feed. I know you've got some pretty strong opinions on this matter, so let's get stuck in. What do you make of this supposedly academic piece?
Well, the thing is, it's sort of typical of a lot of people who just don't understand how the world works. When you have people who don't understand the basics of how things work, it's really easy to fool them. And unfortunately, you see these people a lot of times in academia. You know, sometimes the ivory tower sort of living in a bubble kind of thing is true. And that seems to be the case with this. It's really just very, very easy to see that there's fundamental flaws in this research paper, which said that, you know, kind of all of the trading of Bitcoin resulted from one whale. And their premise is basically because of the way that the supply works. But that's really easily explained by anybody who understands how things work. Of course, there's going to be the movements that you would have in Tether, because that's what people use to buy and sell Bitcoin. So really just fundamentally flawed premise of the whole study. And unfortunately, it's gotten traction with all kinds of media who didn't do their homework, I think.
Now, Bruce, I mean, this isn't the only criticism. Let's put the whale element aside for a moment and talk a little bit about Tether, because this isn't the first time nor the only place where Tether has been criticized as a potential market manipulator, not necessarily playing due diligence throughout their role in the market. Now, obviously, we can talk about the New York Attorney General, who back in April opened up an investigation against Tether's parent company Bitfinex and iFinex, but also from a number of different players, both in and outside the crypto space. Do you think there's any basis for those allegations against Tether, and are there any concerns you have about its role and control of the markets?
Sure. I think that the focus on Tether should be whether they really have the dollars that they say that they have. That's really the only thing that matters. And they've had, you know, various independent groups that have looked at this. You know, they have been audited. You know, there's different questions about that, and that's where the focus should be. Really, is whether they have the funds or not. They've presented evidence that says that they have. Looked like the Attorney General did. You know, there's always some going back and forth on that. But that's where the focus should be, because these movements of trying to explain what happened with Bitcoin, saying that it was some sort of manipulation, those, at least the ones that I have seen, including this academic paper, those just don't really seem to hold water and don't really seem to make a lot of sense. You know, those types of moves, you know, I call it aha people. You know, there's this category of people that they're like, aha, I got you on something that really there is no aha. It makes perfect sense. You know, based on everything that you see in these kind of papers, it makes perfect sense of how Tether would work. It's a separate matter of these other issues of, you know, whether they really have the money or not, and that's where the focus should be. And I think that Tether has you know, presented evidence to that, and there hasn't been you know, much evidence to the contrary on that. So but it's two separate matters. You know, the manipulation type of thing. You know, using it's misused correlations. Basically, it's misunderstanding a correlation and thinking it's the cause of something, which is something that you see a lot of times with people who just, you know, don't understand how the world works. I see trolls all the time. They'll make weird correlations and say, "Aha, you know, you did this and this," and they're things that just you know, they're easily explained by anybody who understands how things work.
Now, and in terms of, again, just sort of focusing in on Tether's role in the market and maybe the way in which it has an outsized influence, one element of the study that I personally found quite interesting, the Griffin and Shams study, is they do talk about the fact that Tether's market cap rose from, it was established in 2014, but as of March 2017, it was only worth about $25 million. And from March 2017 to March 2018, it went up by about $2.2 billion in market cap. Do you see that as just a good, healthy development of the market, or do you think there's some concern here? As you say, there's people looking for that aha moment. Do you think there's a healthy development for Tether and for the market as a whole, or is there too much reliance in the crypto space on Tether as a whole?
Yeah, I don't view that as a big red flag given the way that the markets moved in general. It makes perfect sense based on the way that the markets were moving and what was happening in the markets. You had this very, radical rise around 2017. And you also had capital controls put in China and other places where it sort of caused more demand for Tether. There was more people that needed to use Tether to be able to move their money around, as well as moving it between exchanges. Exchanges use Tether as well. So it's again, perfectly, good explanation of what happened based on the way that the market was moving.
All right, so there, I think we've sort of tapped that well there about what's happening there with Tether, but let's look beyond the sort of the interworkings of the crypto space and what's exactly happening inside it, and now move to address some of the wider actions that happen in the greater markets and greater elements of the world. Because of course, crypto space, the crypto sphere, as some like to call it, doesn't exist in a vacuum. There are many other facets of life and society that have a great deal of impact on it. And I know one topic that you have a particular interest in, Bruce, which is the vast array of civil unrests that are occurring across the world at the moment. We're talking about Lebanon, we're talking about Chile, we're talking about Argentina, we're talking about Hong Kong, numerous bouts of civil unrest taking place across the world. How can this impact the crypto space that isn't totally insulated, certainly at all insulated from some of these major unrests?
Well, it's really interesting that you see all these protests all around the world, yet here in the United States and other places, you have people, and in the EU, you have people calling for more government. It's like humans never learn. We never seem to learn. Even as we see our fellow humans being, beaten and sometimes killed by governments, we're out there just hoping that we're going to get some great leader who's going to not do this, or hoping that you can create this big apparatus and you're not going to end up with a bad person in charge at some point. My thought is that, and history shows that you sort of always end up with somebody bad eventually using these vast government powers against the people. And that's exactly what we're seeing. That's why we're protesting. Where this is relevant to crypto is that it's taking a little bit of power away from the governments and putting it in the hands of people. Whether you're really liberal or really conservative, I think most people don't put government running money as a high priority. They may put healthcare or war or whatever their thing is. But usually, in political discussions, you don't see a lot of these people at protests who are talking about monetary policy. And that brings the question of, why do you even need government to be involved in money? Why do you need these central banks? They don't do a lot of good. They do a whole lot of harm. And I think it'd be better if more people recognize this. And crypto is one way to do that, combined with the kind of civil unrest that you're seeing, these protests where people start to maybe distrust their governments, and in many cases for valid reason, and say, well, I wouldn't trust the government to walk my dog. And I mean that. I really wouldn't. I mean, would anybody, if you have a dog, would you say, I'm going to trust the government program to walk the dog? Probably not. So why would you trust them with something as important as money? We have proven through Bitcoin and other technology, we've proven that we are capable of running our own money. We don't need these people. So the less that we give them power and the more power we take back to ourselves, eventually that hopefully leads to more peace. So that would be a good thing.
I wonder as well, though, Bruce, sort of talking about the taking back of control when it comes to digital asset space, because although Bitcoin itself was founded on this concept of individualized control and anonymity and taking back that personal sort of element of control over one's own money and monetary policy, today the modern crypto sphere and the modern sort of infrastructure that exists, 11 years later, I'm saying, after the original release of the white paper, does have a number of bottlenecks around it. Whether those bottlenecks be government run, whether they be exchanges, whether they be ways that people access the market, there aren't, I suppose, that many people still directly interfacing, with running a full node on Bitcoin or on whatever network they're preferred to invest in terms of engaging at that level. Do you think that's a weakness in the modern market and something that needs correction? Or again, do you see this as a healthy part of development?
It's both. I think that the biggest difference is that a lot of these bottlenecks are voluntary. I'm a big believer, and a lot of people disagree with me on this, but I'm a big believer in custodians. I personally, especially being an investment advisor, even as a small investment advisor, you can have tens and tens of millions of dollars easily. And I have absolutely no interest in having tens of millions or hundreds of millions right here in this office. I don't want to be mugged or attacked. So I'm a big believer in custodians, but the big difference is that they're voluntary uh, versus central banks. That's the kind of banks we're trying to avoid. It's not banks that you voluntarily go to and say, I want this to be kept safe. It's the banks that are exercising power over you through central control. So the difference is you do have some of these things like exchanges and some of these other bottlenecks, but they're more voluntary in the crypto world. I have the option to take things out of a custodian, and I can put it on a paper wallet, put it in a physical safe, or hide it somewhere where nobody can find it. And that's putting more power in the hands of the people. And what that does is it creates more competition between the powers. When you have a power that you have no choice but to use, like a central bank, that's when you have abuse of authority. But if you have power that people can take back and move around, and I'd like to see that with stocks too, by the way. I'd like to see you be able to just very easily move your stocks out of your broker and move it to another broker, or put it in your own custody or some custodian or something like that. And that'll give more power to the people. And when you have that, you have a more fair set of competition where these powers are trying to earn your business rather than force you to use it.
And that's a neat segue there, Bruce, into the next point I'd like to bring up, because you've had an interesting announcement come up in the last week. Of course, I'm talking about your announcement of Watchdog Capital, in which you're aiming to use digital distributed ledger technology to empower securities developments in a whole slew of new and innovative ways. Can you tell us a little bit about that?
Yeah, we're really excited about that. Watchdog Capital is a fully SEC registered broker-dealer that's a member of FINRA, which is the main governing body for brokers in the United States, and pretty much all of the major brokers are members of FINRA. So that we saw some time ago, we thought that the way that this was going to go was going to be much more enforcement from the SEC. A lot of the issues that came out in 2017, we thought were not in compliance with securities laws, and it turned out that our theory was right. So we had quite a while ago decided to go down this road of becoming fully regulated. And it's also the business that I came from. I started my career as a stockbroker. I did that for 18 years, and I've been a registered investment advisor even longer than that. So that was important to us. We think that there's something very exciting about the way that you can raise capital in a more seamless way. The biggest problem is that most of these offerings weren't in compliance with the law. And then that led to, because they stripped out all of the things that make it a security, equity, profit sharing, any of these kind of things, trying to avoid the laws, they ended up with really bad offerings. So they were risky startups on top of raising outsized amounts of money and on top of stripping out everything good. You can fix those things pretty easily. If you have startups that share with classically recognized structures like equity and profit sharing, then they're definitely securities, so they have to comply with more rules. But I think that creates a lot of potential for fundraising and can put more power in the control of investors. And I'd like to see everything tokenized. I think we could have thousands and thousands, maybe even millions of stocks globally, and have them move around in a very easy way, the way that crypto moves around. And that would be really exciting. So it's part of a bigger picture trend with the way that securities are working and tokenizing securities. And we're really excited about that for sure.
Yeah, I mean, I was interested because I saw, again, looking through your Twitter, you posted a very interesting video talking about that exact notion, that idea of a fully tokenized future in which you don't count securities in the matter of thousands, you don't even count in the tens of thousands, but in the millions. I mean, what does an ideal future look like for you in which you adopt this sort of digital asset and distributed technology integration into a modern securities framework?
That's a great question. I think the core of the global economy and free markets is the ability for people to put skin in the game and take risk on something. And they might be right or they might be wrong, but the more that they can do that, the better. Because some people know things. Everybody has their own knowledge. You know your certain industry, your local community, your favorite restaurant, certain technology that you might be a fan of, maybe even a game. And you may have a gut instinct that says you think something is going to work, and right now you can only invest in a small percentage of that. For example, it's very difficult usually to buy equity in your local favorite restaurant unless it's a big chain that's publicly traded. You can't really do that. It's not practical. But tokenization can make it practical. And we should also be able to buy kind of any small business or any startup in small amounts, not $50,000, but have people be able, because I might not want to put $50,000 into a small restaurant. I'm not a restaurant investor. I might want to put a couple $100 into some of these things. And that's just not practical in today's world, but this technology makes it so it's practical. So in an ideal world, pretty much anything you look at right now outside is a security of some sort. It's either a building that's owned by a corporation, or it's a small business, medium-sized business, or large business. Those are all securities in some form. I think it would be an ideal world where you could invest in pretty much anything, and not just in your own country and your own community, but globally. To be able to have millions of options where you could buy a small piece of a restaurant in India, or a small video game startup in Japan, and you'd have a whole bunch of investors that could participate this, and you can trade these things across borders just the way that you can trade your Monero or your Bitcoin across borders. That would completely change the way capital markets work. And the more people that can put this risk out there and put skin in the game in these investments, the better it is for everybody. The investments certainly don't all work, but putting more capital out there and having these things be able to be done it would be huge. Be totally transform the way that the global economy works.
Yeah, it certainly sounds like a bold vision of a new and innovative future. One will be very interesting to see how it does play out. But Bruce Fenton, I want to thank you so much for joining us on BLOCKTV and getting into some of these heady issues, taking a deep dive into some of the key things driving the market now and potentially into the future. In the meantime, stay with us at blocktv.com for all the latest in news and information. I'm Westropp-Evans. Thanks for watching.
For more news and updates, follow us on Twitter.